Okay, let me actually go to my Telegram so you guys can see exactly what I put in there. Um, and we could go over that. All right. So here's my Telegram. I put this in yesterday. I put this post in. It was a Instagram setup that somebody had sent me, one of my friends, and they sent it to me, and we was going over it. And I put in there, I said, why did they miss this? And where could they have adapted if they missed the tagging? All right. So I want to go over this and go over, have a lesson on this. All right. So let me copy the image and I'm gonna put it on the chart real quick. Let me go to, and this right here is something that really like leveled up my trading, just this understanding alone, right? All right, so let's put that on here. Let's move it up. Can you guys see this?
Yeah, we
okay.
Yeah.
Okay. So I want you guys to mark this out. If you guys want to annotate, this is a little I will hope you guys participate just a little bit. I want you guys to mark out exactly where I would have wanted to get in, like what around on this side of the chart, what PD array am I looking at? What exact point am I looking at to get in inside of this whole move, right? Just annotate wherever. And I want to see if you guys kind of see where exactly where I would want to get in at. And why, and I'll explain why exactly they missed this and where they could have did better. Okay. Anybody else? Okay. So I guess we'll just use what you did. All right. So yes, that's it. That's the point where I would look at. And I'm gonna explain exactly why I would look at that exact area. And I'm gonna kind of like refine it a little bit more. All right. So let's go on the chart. Everything that had was fine, right? It's just the entry. Now before I go over everything, I just wanted to say like everything that I like teach on or like go over is all ICT. All credits goes to him. I'm just giving my perspective on everything. The foundation of my trading is ICT, and you know, all credits, like I said, it all goes to him. So let's go over that real quick on Euro TBP. All right, so here's the chart right here. Now, the reason why I would get in exactly right at the open of this imbalance right here, not here, but right here. The reason why I would get in there is because let's go over what's an order block, right? And ICT goes over that. Order block is a change in the state of delivery, right? That's what an order block is, a change in the state of delivery. So whenever you see this right here, let's say we have this model right here. Hold on, let me draw it out. Let's say we have this model right here where you'll have stops be ran like this, and then you have this right here. Where in this is the order block? If you would just like mark this out, this whole range, where exactly order blocking that?
I would say the up move that took out the liquidity.
Okay. So basically the order block in this whole move would be this whole entire up move. All right. The premium of the order block is up here. All right. So if you would like take your fib, right? 50%. The premium is above here, right? Discount is above here. Now, a lot of teachings on YouTube with smart money, SMC, whatever. You see a lot of teachings. You see a lot of people call it supply and demand, which it is kind of like an area of supply and an area of demand, right? But the way people teach it, they try to make it into their own and they don't teach it correctly, right? And you'll see a lot of over refinements. You'll see a lot of, then this is how I used to trade. I used to over refine. Now, if you're doing this, right, if you're waiting for the premium, let's say you want to wait for this up here, you want to get like a minimum minimum stop loss, you feel me, in a very refined entry, and it works for you, and you like the high risk reward, continue to do that. Don't get me wrong. But with me, right, I used to trade the same way, and I feel like the way that I trade now, I'm a lot more accurate, and I'm getting in at the right places at the right time, right? And I think it's very good with your trading when you could be that accurate as well, right? But like I was saying, do it consistently if it works for you, if it works for you. But it's about getting in, like I said, getting in at the right places at the right time. So with this understanding, right, inside of here, where's the order block? Where would the order block be inside of here? This whole thing. You guys would like to draw it out? You guys can, if you want to draw it out.
Okay, let me just try to draw it out. So I would say the order block start from this up candle right here, and 1, 2, 3, 4 bullish candle. That should be the order block.
Exactly. Yep. That's the order block. A lot of people, when they teach it on YouTube, they teach it's the last up candle before the down move. They would teach this is the order block right here. Now, you know what I see? I see this whole entire move right here as a whole order block. Right now, this is the fractal part of the market of my understanding on it. This whole up move is an order block. The reason why this whole up move is an order block is because an order block is the change in the state of delivery. All right. So once this buy stops got ran right here and it broke below here, here's your shift in delivery right there. This whole entire move is your order block, and every order block has a breaker. All right. Every order block has a breaker. Whenever I'm trading, right, whenever I'm looking for entry, and I don't know, I see an imbalance, but I don't know exactly where to like get an entry at. This is how I would see it. I would look for the breaker of the push up, right? Even though this isn't consecutive up candles, this is still an order block to me, right? Just like here, from this down candle to these 1, 2, 3, 4 pushes up, like you said, this is a full order block, right? So inside of this whole range, I'm looking for confluence. Where's the imbalance of this whole entire range, right? And as well, I really like this area because it has this last down candle right here of this whole entire push up, which is the breaker of this whole entire push up. Just like here would be the breaker of the order block. So if you would go to, let's say, the 4 hour, let's go to the 4 hour. All right, now you have, look, 1, 2, 3, 4, 5 push-ups. You go to the daily, let's see if that's a full daily order block. That's a whole daily order block. All right. So anytime you got to swing a price that's broken above in context, this whole swing down can be an order block. All right. So right here, let's go to the hourly. 2 hour. Okay, so right here, their entry should have been at the open. It could be at the open because that's where the bulk of the volume is. It could be at the open of this order block because this is an order block, not this right here. Relative to the time frame, it can be, but relative to this time frame, this whole 4 hour, this whole up candles right here, that's the order block. If you would go maybe to the 15-minute time frame or relative to that time frame, then this last up candle could be a order block if it goes into there. But it is an order block. It is an order block inside of this whole move. This is just the premium of that whole order block. Just like if you would take from down here to up here, this would be a premium of this whole range, which is an order block. All right. So whenever I get in, I'm looking at the breaker. I'm looking at where the imbalance is right here. You could have either got in here, right here, and this is probably where I probably would have got in, or you could have gotten here for a more of a refinement for a better stop loss right here. And this is accuracy. Whenever price is very bullish or very bearish, you won't see price really come to premiums, like very high premiums or very low discounts for price to start moving to its draw on liquidity. You won't see that much. It'll come into the order block right? Just a little bit, maybe mean threshold, whatever, and then drop. You know what I mean? It doesn't come all the way up to very high premiums. They had their entry right here, and it should have been right here. All right. So this is what I look for. All right. So this was your entry right here. You have an imbalance inside of that whole order block. All right. So boom. That could have been an entry. Now, if they would have missed this right here, there's an area where they could have got in and they could have adapted. Right. So inside of this move, this whole range right here, they could have adapted and got an entry inside of here, because whatever fractally what happens here, you could do the same thing inside of once it comes into your specific array, right? So let's go over that real quick. Okay. So let's go. Okay, so this is the 2 hour. Let's go to the 1 hour. Okay, so the 1 hour time frame, right? This is what we have. You can see that this high was ran, right here. Okay, you have this up candle that got created, and then you have a down push right here. Okay, this is where the point where it did break right here, but inside of here you have this up candle that got created after it ran out this high right here. So I know that we could potentially frame a trade inside of this up candle as soon as it's broken. All right, so here's our range right here. We could do like this for the up candle right there. Boom, that's our range. All right, let's go do this real quick. All right, so this is our up candle. It gets broken right here by this down candle right here. So we could potentially frame a trade inside of this up candle that's reacting inside of our PD array. All right, let's go to the 30-minute, scale down very slowly and get information. All right, so you can see we have 1, 2, 3 consecutive push-ups. This is a full order block, right there. Let's keep continuing. Okay, so we have an up candle right here, but we're still paying attention to this whole range right here. So now we can refine a little bit, and you'll have this 15-minute up candle right there that you could pay attention to. All right, so let's do that. Go to the 5-minute. So notice how I'm only scaling down. I'm scaling down very slowly, right? I'm not going right to the 1 minute. I would build my information from the time frame of this PD array all the way down to the 1 minute and build information, build what's going on, right? And get my PD arrays. Okay, so here we go. Look, you have this 1, 2, 3, 4, 5 candle push up. The order block inside of this range right here is this whole range going up. The premium of that order block is right here in these two up candles. The discount is here. All right. Now where would I want to get in? Because we have buy stops being ran right here, and then we have a shift in delivery right here. All right, as soon as we took out this low right here, that's when the shift in delivery happened right here. So as soon as we took that out, there's the shift in delivery. Here's our order block from these two arrays right here that we're framing the trade inside of. We also took out another structure right here. Now, where exactly would I want to get in?
So if I'm seeing right, is this an imbalance right here? I can't see the candles too good.
Yeah, it's a very small imbalance. Now you could wait for up here, correct? You could wait for up here, but then you're over refining at that point. You're over refining. This is the array that you want to get in, this whole order block. Anywhere inside of this range, they can tap into and then leave it. So we're looking for the nearest imbalance after this whole range is broken. We're already refined. Say we weren't refined. Say we're trying to frame a trade, right? Then we could potentially wait for up here to get a better refinement. But right here, we're already inside of that whole 2 hour order block, right? This whole range of this blue array, right? We're already inside of there. So now we're over refining if we try to do more, right? And that could create inconsistency. See, this is what I had to learn. It created inconsistency in my trading because I'm trying to do too much. I'm trying to over complicate it, right? The entry should be the most easiest thing, right? The entry part of things should be the easiest thing. So we have to make it simple, all right? This is where I will want to get in. I'll take an entry here because you have this very small imbalance, and as well as where's the open of this whole entire push up? It would be right here. That would be the open right there. All right. And that's why OTE is very powerful as well, because you have this whole move up going up right here, right? This is why optimal trade entry that ICT teaches is very good, because you can wait for it to come to the 62. But like I said, the imbalance is right here. So you can wait for it. As long as it's above 50, then you can get an entry there. All right. You don't have to wait for it to come up into this imbalance, since the imbalance is here. If OT is here, right, and the imbalance is here, just get in at the imbalance. You don't have to wait for OT and wait for to get in right here. As long as your stops are safe above here, it doesn't matter where you get in inside of this whole dealing range, right? From this high to low, that's the dealing range. If you get in anywhere inside of here, your stops go above here. Don't put it. You can try to over refine and put your stops. You know, it depends on your trading plan. It depends what's comfortable with you. You could try to manipulate your stop. Maybe there's like an up candle inside of here, and you want to get super refined. But a lot of times it can purge that, come up into this array right here, and then you get knocked out, and it moves in your favor when you are right the whole time. You know what I mean? So I'm getting in here, right here. So this would be my entry. And my stops are outside of the dealing range. I don't have my stops inside of the dealing range, just in case it wants to come more into a premium. All right. Depending on your trade management, what do you, how much you want to aim for, whatever, you can aim for whatever you want. All right. You can aim for this order block right here, because this could be your range of opportunity from here, right here, to up here. Now remember, we're framing the trade inside of that whole array, so there's a lot of downside that we could take. So you can like partial out once we come into this imbalance, or this right here. You can partial out and then leave runners to higher time frame draws on liquidity, right? So that's what you can do through there. But this is exactly where they could have adapted at, right there. You also have what right here. You have another break right here. All right. Whenever price is drawn to a certain draw, right? Let's say sell side liquidity, for example, price likes to respect up candles on the way to that draw on liquidity. So once this happens here, where you have these two up moves going up and this breakdown right here, you have another state in the change, shift in delivery, because they bought right here, right? They bought up. And then once they broke here, that's a change in the state of delivery right there. So these two up candles become an order block, right? Where's the imbalance of that order block? The imbalance would be, it's very small, but right here. But you could be, actually it's right here. You see this? Look, here's two consecutive up candles. And then you have an imbalance right here. This is where you would get in at, right there, okay? And then you will put your stops above the up candles, this high right here. You could put it above the up candle right here, but I do like to put it above the high of it, right? Just in case they want to play around, maybe come up above the order block and then still close below it, right? So I like to give it room. So you could have got another entry right here. You could have moved your stops from here. Once this broke down, you can move your stops to this high right here, and then you could scale in if you want to from this position, right? But that's a very aggressive scale in, which I like to do a lot. I like to scale in aggressively sometimes. So, but yeah, this is what was the entry right here. Do you guys have any questions on specifically what I just went over just now? You guys would like to chat, you guys can.
What is the average RR you tend to aim for?
How much risk to reward do I like to attempt to aim for?
Yeah.
A minimum, I want to see a 1 to 2 minimum. It depends on where my draw on liquidity is. So let's say I see like 3 relative equal lows down here, then I would like to aim for that, right? But I will partial at areas where it could potentially reverse that, because you don't always know exactly where price, if price is going to really want to move to the draw, or if it wants to, like, maybe it could come to this candle right here, maybe have another deeper run, right? And then continue down, right? You don't know if this could be the high of the move that's going to go down. So I like the partial, at least around the 1 to 2. But a lot of times, recently, for like the past 3 months, I've only been aiming for a 1 to 2 and a 1 to 3, right? And that's all I need. That's fine with me. And you'll easily get that a lot if you get in at the right places at the right time, right? Instead of waiting for trying to over refine your stuff. You know what I mean? Like my trading, how it used to be, is I used to over refine, try to wait, get the best stop loss. You know what I mean? And try to aim for like 1 to 10s and 1 to 5s, which it wasn't bad, right? But my trading is a lot better with my personality. And it's been a lot smoother, not over complicating the entries, not over refining my entries, right? So it's a lot easier when I get in like this, right? Instead of over refining, trying to get in up here, try to get like a 5 pip stop loss, you know what I mean? And enter off of that. Or let's say for this, for example, this array, for example, me trying to get in at that last up candle or the last 2 up candles like they did, right? When your entry would be at the breaker right here of this whole entire up move, right? Or the imbalance, if there's an imbalance. But like I said, this whole up move right here is a complete order block, because it's a change in the state of delivery, right? So this is where they could have did better with. But yeah, that's how my trading is. I aim for a 1 to 2, 1 to 3. Get in at the right places at the right time, you can easily hit those. And I do scale-ins as well, so it pays out a lot bigger if I get scale-ins and it moves to my draw on liquidity. We got 8 minutes. Let's do questions for this whole 8 minutes. If you guys are missing something, you guys can go ahead and ask it right here.
Right, my next question would be how much percentage would you scale in? Like you're in a trade, you're scaling in. How much percent would you?
How much percentage do I risk per trade?
How much do you risk for your initial trade?
Okay,
But
and then my scale-ins.
How
Okay.
much you risk for your scaling as well?
Okay, so my initial risk for the initial trade is 1%. I might move it up very soon because my strike rate has been pretty good, so I might move it up pretty soon. But yeah, 1% is my initial risk, and then I pyramid it. So if I'm risking 1% here, my scaling would be 0.5% right there, and then my next scaling would be 0.25, and then I'll probably do another 0.25 depending on how far I am from my draw and how many times I can get in. So I'm just pyramiding it. So that, and as I'm pyramiding, I'm moving my stop loss to logical places where I don't expect price to move. So if I do get taken out on that very small scaling, I still made a lot of what I've had. And usually when I'm scaling in, once I hit a 1 to 2 on my main position, I might take out one of my scale-ins just to pay myself, and then have it continue, just in case I do scale in and it stops me out. I still made what I was looking for that day. You know what I mean? So yeah, just pyramid your stuff if you're scaling in. Don't scale in big first, and then scale in small, slowly and small as it's going down.
All right, thanks for that.
No problem, buddy. Do you guys have any other questions? All right, so I hope you guys found this insightful. I hope you guys can utilize what I just told you guys. If you guys look at the market, like I said, if you see up moves that goes up like this, once it's broken, it's a shift in delivery that whole up move can be an order block. So just go over it through price, and you might have a moment to where it's like, wow, I've never seen it like this. You know what I mean? And it might change your perspective. It might make even your entries and your analysis a lot better. If you look at how I just told you how I just showed you it, if you look at it in that way, in that perspective, you might have a very huge level up. So hope you guys enjoy the rest of your day. For the people this is gonna be on YouTube as well. So people on YouTube, if you guys enjoyed this, go ahead and like this, share if you would like, comment if you would like, and I will see you guys as well. So I hope you guys enjoy the rest of your day. Thank you for joining in with me.